Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, May 31st, 2013, the last day of May. So we got some action today. Actually, we've had a lot of action this whole week. But before we get into that, let's just run through some economic stuff here. This last week we had a couple of surprises in the U.S. We've had some good consumer confidence numbers. First, by the Conference Board on Tuesday, came out at 76.2. That's the highest we've seen in a very long time, about 5 years. And then also on Friday, today, we also had the University of Michigan consumer sentiment come out, and that was also a little higher than expectations. So overall, pretty good consumer base here, consumer confidence throughout the U.S. So that's very encouraging. In Europe, German unemployment jumped up a little bit this last week for the last month, up 21,000. So that's a little disappointing for the EU. And then some numbers out of Japan early Friday. Household spending up 1.5%. We were expecting 3.1%, and last month was 5.2%. So a little bit of a disappointment there. And then also industrial production in Japan up 1.7%. Now that's quite a bit higher than expectations, which were 0.8%, and considerably more than last month's 0.2%. So very good numbers there. Today in Europe, also, the unemployment rate, 12.2%, the highest rate now that Europe has seen on an overall basis. So really not a very good thing at all. Europe continues to slow down and unemployment continues to tick up. It's just really hurting them more and more as time goes on. So not a good thing. Next week, a few items to note. On Monday, some PMI numbers coming out for Europe as well as U.S., and also on Wednesday. So we'll see what those have to do. Most of them, none of them are really expected to be anything big, any big changes from last month. So see how they come out. But if there is a surprise on one of them, it could move the markets a little bit. Then on Wednesday we have GDP out of Europe, a revision. Expect to be negative 0.2%, same as originally reported. Then in the U.S., we have ADP non-farm payrolls expected to be 171,000. Last month was 119. So we'll be looking for the number for this last month for May, as well as a revision for April's number. Also on Wednesday is the Fed's Beige Book, so that will give us some insight as to what the Fed is looking at when they next meet. Then on Thursday, both the Bank of England and the European Central Bank meet to do their thing on interest rates. So we'll see what they have to say on Thursday. And then on Friday, the big report from the U.S., non-farm payrolls and unemployment rate. So both of those will come out Friday morning at 9:30 Eastern Time. Expectations for non-farm payrolls are 163. Last month was 165. Unemployment rate is expected to be 7.5%, same as last month. So we'll see. We've had some pretty decent numbers, with one exception this week. This month, the month of May, for weekly unemployment claims. They've been fairly low, so that could be a trigger that the number could be a little bit better than expected on next Friday. All right, so that being said, let's take a look at the numbers here. Very volatile week. A lot of positioning before the end of the month. The dollar was up quite a bit this month, so there's been a lot of profit taking here over the last couple of days, and now today some repurchasing of those positions to put them back on for the month of June. Excuse me. So Euro US dollar down about 80 pips right now. And just under the 130 level. We were above 130 earlier in the session and have since fallen off. Now, looking at the charts, we're really starting to get into a range here, and we're kind of stuck in this little bit of a range. So we need to break out below that, which is about 127.50 down here. We need to actually close below that. If we look on the weeklies, we can see we still have this kind of head and shoulders formation here, but it's waning here a little bit. We need a close below here in the next week or two, really. Otherwise, we could go up and test these highs that were never tested. So just word of warning there, I guess. Monthly, we're going to close out the month negative, and very indecisive. We're still in the same range we were 2 months ago. So really not any clear direction here. We still had the much longer, much bigger picture here down, but that doesn't necessarily mean we can't move up 1,000, 2,000 pips within this as well. So we're really thinking that at this point we could maybe bounce a little more and then fall off. If we get that weekly where we close up above the most recent highs, which is about the 134, 135 level, if we close up there, then we could see 141, 142. But again, that's much longer term. Pound dollar right now down about 54 pips, just under the 152 mark. We ran up yesterday quite a bit, as well as on Wednesday, and now today backing off a little bit. We could get up to this area right here, and then we would have kind of a bottom here, kind of a U-shaped bottom, much like we had back over here where we formed this bottom down here. So not going to hold my breath for us to really form a bottom, because if we go out to the weeklies here, we're still well below this trend line. We're clearly moving lower. There is nothing here to indicate that we're gonna bounce up and go up and make new highs. Really, it's longer term, still looks very weak. This is nothing more than a minor little correction here. And on the monthlies, this is now the third month we're below this this trend line. We're closing below this trend line. We're also closing at the lowest level that we've had in 2 months. So really do not see us moving up from this point, technically, from a longer term standpoint. U.S. dollar against the Swiss franc, up today, up about 71 pips right now, back above 96. We sold off violently for 2 days on Wednesday and Thursday. Dropped just about almost about 250 pips. It was quite the move there. So a lot of dollar positioning as well as Swiss franc positioning, and at this point it kind of looks like it's almost over with. We probably put the lows in here today, and we'll probably bounce up a little on Monday, and then we could fall off, test these lows, and then make another move up. Now if we look on the weeklies here, we can see how last week was negative. This week is just barely negative, and it really looks, stochastics here kind of crossed and correcting, but it really looks like we got a flag going here. So we flagged down a little bit, maybe one more week, and then we can go up and make some new highs here. And if we look on the monthlies, we are failing this month to close above this many-year trend line, which goes back to just about beginning of 2001. So about 12 years worth of downward movement here, and we're failing to close above it, which is kind of disappointing. We were hoping to see that happen this month, and we're not. But at some point here, what's going to happen is we're going to violently move up here, and probably move up to around the 102, 103 area 1 month, close up there, and then that is going to be it. We're going to be off to the races on this one, going to the upside. U.S. dollar against the Japanese yen, up a little bit today, up about 14 pips. We're down earlier in the session, then we rallied up, and it looks like we're starting to form a little bit of a turnaround pattern right here. We've had a nice correction off of the highs, so maybe another day or two in this range, and then we'll start to move up to some new highs. Weekly looks really good. We've got this trend line right in here, and we've pulled back now two weeks. Nice little correction. We're almost at that support line, so maybe next week we test that support line and then rally up from there. Longer term, it just looks really good. The month closing out very well, looking very nicely. This is now what, 1, 2, 3, 4, 5, 6, 7, 8 months in a row of moving up. So very, very strong here. We're following right along this this little trend line that's in there. Really looks like it's going to just continue. There's no indication that we're going to stop here, so we should continue to see the movement up. Euro Swiss up a little bit today, up about 18 pips. We were down quite a bit earlier. We actually got down below the 124 mark and rallied all the way back. So kind of looks like we're pretty much putting in the lows today. We should maybe on Monday consolidate a little more here in this area, and then it'll probably start to move back up. Now we look on these weeklies here, and we can see this nice curved bottom here, which is very indicative of the Swiss, and really setting in with all the crosses some good patterns, and this is one of those very good patterns. So we are going to finish the week out barely positive after last week's barely negative week. So we are kind of flagging back a little bit, and again here this is one of those kind of situations where this market can move very quickly, and I'd rather think we're going to see that happen here. We'll probably run up to around the 126.50, 127.50 area and close up there one week, and then it'll be off very quickly to the 130, 132 mark. So this market has, as you can see in the past, very volatile movements, and we've been, of course, for the last couple of years very, very benign. We should see that change here again as we start to break out. So just a matter of time here. We're getting closer. You can see it more and more each week. Euro against the yen, we are down about 60 pips right now. We've been all over the map here today. We're still in this consolidation, and it has more to do with the weakness of the euro than the weakness of the yen. And if the euro can gain a little bit of strength, which it tried to do this week and then gave it back, the rallies have been very, very short-lived here in this cross. So really expecting it to consolidate a little bit more. We look on the weeklies, we can see here we had a pretty good consolidation like this back here. So really expect it to kind of do that same thing here, which would mean we could get down to around the 128, 127.50 area, and do that over the course of about 8 weeks, 9 weeks. So we could see that happen here, or we could see the euro gain some strength or just hold still, and the yen weaken considerably. That would push us up to that 138 level, and that's really what we're looking for this market to do, and then probably find a range between the 130 and 138 level. So that looks more possible. But again, we could see that movement back down. On the monthlies, while we still look very strong, does not look like we're going to back off at all. So we could really see that run to 138, maybe even this next month. It's very possible. Run up there and then fall back a little bit and consolidate in that range, that 800 pip range for probably many months, the way it looks, as 8 to 9 months. That is it for today. Questions, comments, please visit fxaddicts.com. My name is Tim Lucarelli again, and you can certainly join. We offer a 7-day free trial. We also have classes, and next week we are doing another scalping class next week if anyone is interested. We had a couple of people that couldn't make it last week or 2 weeks ago, whenever we did it. So we scheduled an out-of-schedule class for next week. So if anyone's interested, you're more than welcome to register for that, and you can do that on the website. Have a very good trading week. Thank you.